So my current call option trade into Pepsi is down $365. And so am I worried? A little bit, yes, but at the same time, not really. And so what's next, right? The next move from here is to basically just wait it out. It's basically playing the waiting game at this point. And the reason I say that is because if you take a look at yesterday's stock that I mentioned, which was Microsoft was down all the way to, it was down 6%. And then today it was up 0.99%, right? But if you look at the high, it was at a high of 415. And so I'm like, okay, so I was kind of right in a way of saying, like, the position that Microsoft is in right now wasn't gonna really last for that long. So basically, the people that got into that got into Microsoft basically saw it as an opportunity to get into Microsoft before Microsoft could go back to possibly all the way to 431 or 440, right? And so I feel like the same way with Pepsi in a way. They're a profitable company, first of all, and second of all, they're a mega cap stock company, and so typically these type of companies are profitable, and if you take a look at their earnings per share, look at their annual earnings per share. They've been each year like profitable. And so, I don't know. I just feel like Pepsi right now, yeah, it is facing like downwards momentum, but I feel like in a way, eventually, Pepsi is going to find its foot around somewhere, and it's just going to rebound towards the upside eventually. And like right now, if you look at it on the weekly chart, it kind of looks like it's around this like small support level around, I want to say 165, 164. Yeah, but time will only tell when this will eventually go up. So honestly, I'm just going to play the waiting game. And then I was trying to learn, like I've mentioned before, right? I'm trying to learn to day trade in a way. And so basically, this whole week I've been just dedicating myself to just learn how to day trade, right, with a specific strategy. And basically, the strategy is basically you what's it called? So basically, you use the moving averages. So let's take a look at an example. Let's see if I know how to work this thing. Not this. Where is it? Not sure if it's gonna show it or not, but okay. I think, yeah, this is it. I'm sorry. So basically, looking at Google, right? For example, Google. I got into Google, right, at 1351. So at 1351, I got into Google call options. So looking at Google at 1351. And mind you, I look at these stocks mostly on the 30-minute time chart. So 1351. Is it this one or is it this one? Okay, so it's this one. So basically, as soon as I saw that Google was approaching the 180-day moving average, I got into a couple of call options, right? And then basically I just waited to see if Google would approach or like land exactly on the 180-day moving average. That didn't happen, and basically we saw upwards momentum, but you can kind of see that basically it looks like it touched. I guess it did touch it. Let me see. So it was, the next candle basically was close to touching the 9-day moving average, but just barely. And so when I saw that, I took that as a hint. I was like, okay, possibly further down the day, right? I guess later during the day, Google is going to have trouble breaking the 9-day moving average, possibly. And so around, let's see, when did I sell out? So around 15:10, I sold out. And like I said, basically I saw that Google was approaching the 9-day moving average, and I saw that it got rejected by the 9-day moving average. So I basically sold out as soon as possible as the position was up. I think it was up. I think I want to say 4%. It was up 4%. So it was basically close to my. I guess you could say my percentage target, but which is basically sell out of a position as soon as it's close to 5%, or if it's exactly at 5%. Or sometimes if I'm feeling really confident in a trade, I can sell out of a position once it's up 10% or close to 10%. And so in this case, I took in mind I just saw that, okay, Google is approaching the 9-day moving average, and I feel like it might get rejected by it during the day, and so I might as well sell out because the position is up 4%, so it's close to its percent target of 5%. So I might as well just get out the position and just move on to the next trade. And so basically that trade made me $159 just trading Google. It did take a little while, so I want to say it took almost like 13 for like an hour or so. So it took almost like an hour to exit out that trade. And so I want to say this trade, not say like this trade, but I want to say like this current strategy that I'm using is basically step one, trade stocks that are mega cap stocks only. Step two is to use the moving averages as support and resistance levels, and then step three is to basically know what your step three is basically know what your percentage target is. So basically, let's say you want to exit out of a position as soon as it's up 2%. If that's your price percentage target that you want to aim for, then go for it, right? But my personal price percentage target is at least 5% or close to 5%. And then, step four is sell out the position when it's close to, 5% or exactly at 5%. And that's pretty much it, basically. These are pretty much all the trades I did this week. So basically, McDonald's is the only losing trade, but that's pretty much it. I mean, I did pretty good, I guess I would say. So, yeah, I guess that's pretty much it. Basically, the trade, my real account, right, is down $325. So basically, the next move is just to wait it out and then just sell out as soon as the position is up 5%. And so that's pretty much it. I'll see you guys in the next video. And as always, take care and bye.